Good afternoon, everyone, and welcome to our webinar, Tax Credits Outreach, Tips and Tools for Advocates, hosted by the National Women's Law Center and the Center on Budget and Policy Priorities. We have just a few housekeeping notes before we get started. First, all lines will be on mute during today's presentation. We will be taking questions at the end of the webinar, and you can submit a question at any time through the chat function in your webinar toolbar. Secondly, this webinar is being recorded, and we will circulate a link to the recording as well as to the presentation slides a few days after the webinar. At this point, I would like to turn the floor over to Amy Matsui from the National Women's Law Center. Amy, the floor is yours.
Thank you, Amanda. I want to welcome all of you today to our webinar on Tax Credits Outreach, Tips and Tools for Advocates. Federal and state tax credits can put thousands of dollars in the pockets of eligible families. But if families don't know about tax benefits or how to claim them, they'll lose out. As advocates and service providers, you have a unique opportunity to give families information on tax credits that can help them make ends meet. Today, we're hoping to give you tips and tools about tax credits and tax credits outreach. At the end of the presentation, as Amanda mentioned, we're going to have time for questions and answers. Please submit your questions through the course of the webinar on the website, and we'll do our best to answer them at the end. And then after the webinar, as Amanda also mentioned, we'll email you links to today's materials. Again, my name is Amy Matsui, and I'm Senior Counsel and Director of Government Relations at the National Women's Law Center. I'll be moderating and presenting today along with Jillian Edmonds, who is a fellow at the National Women's Law Center. And we're also joined by Roxy Keynes, who is the Director of the Get It Back campaign at the Center on Budget and Policy Priorities. The Center is a nonpartisan, nonprofit organization located in Washington, D.C. Roxy provides technical assistance, leads trainings, and develops outreach materials to assist organizations nationwide as they conduct local outreach campaigns that promote the EITC, the Child Tax Credit, or CTC, and free tax filing assistance programs. Before we get started, we wanted to find out a little bit about all of you. And so I'm going to turn the presentation over at this point to Jillian, who's going to start us off with a poll question. Jillian?
Thank you, Amy. So our poll question for everybody, we would like to know what type of organization you work for. And the choices are an advocacy organization, a direct service organization, government, tax preparation, or other type of organization.
Great, thanks, Jillian. So most folks should be seeing the poll question up on your screen with the different options that Jillian outlined. We'll give it just a couple more seconds for folks to weigh in on whether you work at an advocacy organization, direct service organization, for the government, or in tax preparation or other. At this point, it looks like about 70% of the participants have voted, so I'm going to go ahead and close the poll. And it looks like 17% are at an advocacy organization, 23% are at a direct service, 7% at the government, 23% at tax preparation, and 30% other.
Okay. So we'd like to start out by outlining that there are a lot of families that can really use these tax credits, especially young families that these are directed at, for especially the child tax credit and the child independent care tax credit. This is actually the first generation in modern history to have higher poverty rates and lower incomes than the preceding two generations. So millennial parents especially are a group who need this, and younger families are really in need of these tax credits and in money as the tax credits provide. Today, in this webinar, you're going to get the facts about tax credits, including the Earned Income Tax Credit, the Child Tax Credit, and the Child Independent Care Tax Credit, as well as the Premium Tax Credit. Get the facts about free tax preparation services, how you're going to spread the word to families with children who need these tax credits, how you can help us gather success stories, and then how you can partner up to expand your outreach. So we're going to cover 4 tax credits today: the Earned Income Tax Credit, the Child Tax Credit, the Child Independent Care Tax Credit, and then the Premium Tax Credit. Tax credits can be worth a lot of money. A family with 3 children can receive over $10,000 from the federal government in tax credits, and a family with 2 children could be eligible for nearly for about $10,000 in tax credits if they receive the maximum for each. Studies find that families use this money to pay bills, purchase or repair vehicles, and to put a down payment on a home. These are large sums that can help a family start saving for retirement or college as well. Tax credits help working families to afford essential purchases and to make ends meet. Many states also offer similar tax credits to families. In 2016, for instance, there are 25 states in the District of Columbia that are offering earned income tax credits, 21 states in the District of Columbia that offer child care tax credits, and 5 states that offer child tax credits. These state tax credits can also put a lot of money back in families' pockets. In addition to the over $11,000 from the federal government, a family of 3 in New York could receive over $5,000 from the state. In that state, all of the tax credits are refundable, so potentially a family could be refunded nearly $15,000 because the only one of the federal credits that is not refundable is child and dependent care. Tax credits lower a family's tax bill and can possibly provide a cash refund. If a tax credit is non-refundable, it will lower the amount of tax that a family owes, at most down to 0. However, if the tax credit is refundable, it can erase the tax bill and then also potentially provide a refund to the family as well. As said before, families use their tax credits to help save for a rainy day and also for large essential expenses. So they use their refunds to create emergency funds or build up savings. They can also split up their refunds if they use direct deposit. For instance, use maybe some to help purchase a car and then put the rest in a savings account for a child's college. EITC coalitions especially can help families save and build assets by helping them determine how they are going to use these refunds. There are a few refundable credits: the federal earned income tax credit and the federal child tax credit, as well as 11 state child and dependent care tax credits, 2 state child tax credits, and 22 state earned income tax credits. Unfortunately, the federal child and dependent care tax credit is not refundable. The earned income tax credit is meant to supplement wages for low and moderate income families and incentivize work. In general, the value of the credit is based on their income and the number of children they have. However, there is also a smaller earned income tax credit that is available to individuals and couples who do not have qualifying children, and that is available as well. In order for a child to be a qualifying child, they must be under age 19 or 24 if a full-time student and live with the family in its main home in the United States for over half the year. This table can tell you how much a family can earn, or how much the EITC is worth to a family depending upon how many children they have and the status that they're using to file. As you can see, a family with 3 or more children that earns less than $47,955 or $53,505 if married and filing jointly can receive over $6,000, which is a great deal of money to many of these families. The child tax credit allows people, the federal child tax credit, I should clarify, allows you to claim up to $1,000 per child, no matter how many children a family has. So for instance, Mike and Carol Brady, if they have 6 children, can claim a $6,000 child tax credit. And if a family does not owe enough in taxes to use all of the tax credit, it may be eligible for a refund. For the refund, a family can receive either 15% of their income above $3,000 or the amount of the child tax credit that exceeds their tax liability, whichever is less. Therefore, In our example, a parent earning $8,500 with no income tax liability will receive a refund of $825. The Child and Dependent Care Tax Credit helps people meet the care expenses they pay in order to work. The key thing to note with this tax credit is that these expenses must be essential for a family member to work. For this credit, a child who is being cared for must be under age 13. The credit can also be used to pay for care for disabled dependents and spouses. So any type of paid care, this includes care in a family daycare home or at a church or at a neighbor's home. It does not just include official child care centers. However, if you pay your own teenager under age 19 or a dependent of the taxpayer, such as a dependent grandparent to watch the children or dependents, then those expenses cannot be claimed. All care has to comply with state and local laws. The Child and Dependent Care Tax Credit is worth up to a maximum of $2,100 for 2 children or dependents and $1,050 for 1 child or dependent. You can claim up to $6,000 in child care or dependent care expenses for 2 or more children and $3,000 for 1 child or dependent. And then depending upon income, a percentage of that is what the tax credit is worth. Generally, the lower your income and the higher your child care expenses, the higher your credit value will be. The percentage of expenses a family can claim depends on the family's adjusted gross income. The most a family can receive is 35% of expenses. And then right on this slide, we have a cheat sheet that helps you determine if a family is eligible for a certain credit and some of the baseline eligibility requirements. One major question that a lot of people have before claiming these credits is whether it will affect their eligibility for other benefits. A lot of low-income families are receiving SNAP, Medicare, or Medicaid, and they want to make sure that this will not erase their eligibility for those benefits. And in normal circumstances, these credits do not affect their eligibility. The child tax credit and earned income tax credit cannot be used to determine eligibility for or the amount of Medicaid, supplemental security income, food stamps or SNAP, or low-income housing. And the child tax credit cannot be used to determine eligibility for or the amount of TANF benefits, or what's traditionally called welfare. However, states can develop their own rules about whether the earned income tax credit refund can be used to determine eligibility for the amount of TANF benefits. So that is something to note if you are in a state where that can be used to increase someone's income and determine their eligibility for welfare benefits. Families can get these tax credits by filing with IRS Form 1040 or 1040A. However, they cannot get these tax credits by filing a 1040EZ. They have to file a separate form for each federal tax credit. Families can also amend tax returns from previous years. They must file an amended return to claim credits they were eligible for but did not claim, or they can file a return if they did not previously file one because their income was too low to require them to file. For instance, earned income tax credits from 2013, 2014, 2015, and 2015 can still be claimed if a person files before April 15, 2017. That information is available on the IRS website under Claiming EITC for prior tax years. States also have different forms and procedures for claiming state tax credits, and that is something that you should know to help families in your state. In 2017, families need to know that there are some tax provisions that were made permanent by the Protecting Americans from Tax Hikes Act that passed last December. There are some provisions relevant to these tax credits, and we've noted the changes in the slides. And then there are also two changes that will impact some of these families at tax time. These two changes include refund delays and renewals for individual taxpayer identification numbers, or ITINs. The refund delays. In 2017, no taxpayer who claimed the EITC or additional child tax credit, so the refundable child tax credit, will be able to receive their refund before February 15th. This allows the IRS to verify income reported, since employers are now being required to file W-2 forms and 1099s by January 31st. When someone goes to a VitaSite, self-prepares, or pays someone, the refund delay is going to still apply, so it does not matter how they decide to file. We have anticipated there will be offers by paid preparers who will say that they can provide tax refunds before February 15th. However, this is not a promise that they can keep, and so families should be told that that is the earliest they will be receiving a refund if they claim one of those tax credits. The individual taxpayer identification number renewals are now being verified. So the IRS is having people renew their ITIN. If they have not used it in 2013, 2014, or 2015, then that ITIN has expired. Also, ITINs with 78 or 79 as the middle digits that have been used on tax returns in the past 3 years are also expiring regardless of when they were last used. ITINs are issued to taxpayers who do not have a Social Security number and are not eligible to obtain one. This is going to be very much relevant for immigrant families who pay taxes, and it takes roughly 7 weeks for the IRS to issue a taxpayer an ITIN, so families that need one should not delay in applying for one and making sure that they are able to get their taxes filed on time. Now I'm going to hand it back over to Amy Matsui to discuss the premium tax credit. Amy?
Thanks, Jillian. 1 second. I'm going to
Amy, you want some
get my
current
slides set up? Thank you. So before we get started, as Jillian mentioned, I'm going to talk about the premium tax credit, but just to break up our information about tax credits, we wanted to have a quick polling slide again to ask you to think about what percentage of people you think who are eligible to claim the EITC fail to do so each year. And your choices are 5%, 10%, 20%, or 30%. And Amanda, if you could let us know when the poll.
Great, thanks, Amy. We're just going to give it a couple more seconds. It looks like people are voting now. So again, the choices are 5, 10, 20, or 30%. And okay, it looks like most people on the webinar have voted at this point, so I'm going to close it. 44% of people said they think it's 30%. 47% of people said it's 20%, 8% of people said 10, and 0% said 5.
Thanks, Amanda. So it looks like most of you, the majority of folks did know that 20% of eligible tax filers fail to claim the EITC even though they can do so. And so that is a significant number of people who are not claiming the EITC even though they could benefit from it. So that's, again, why we're focused on presenting this information to make sure that families can get the information they need around tax time. And then, so one of the other credits we want to make sure that families are aware of is the premium tax credit. And so this is the credit that is specifically targeting families to help them pay for health insurance under the Affordable Care Act, or Obamacare. So under the Affordable Care Act, health coverage is more affordable and easier to obtain, in part because financial assistance is available. The premium tax credit provides financial assistance to help cover the monthly cost of health care insurance. It's available as soon as individuals and families sign up for health insurance through the marketplaces, and it's paid directly to health insurance companies each month so that families don't have to bear the full cost of the premium. So what families who did enroll in health insurance through the marketplace and received a premium tax credit need to know for this tax year is that having received a premium tax credit, they will need to file a tax return in 2017 and claim the credit on that tax return. The health insurance marketplace gives information directly to the IRS about premium tax credit amounts that were received. And then on your tax return, you're going to make adjustments for what your income turned out to be and household size and the other information that you provided when you signed up for health insurance. And at that point, the amount of the premium tax credit is going to be calculated for final use for 2016. Because there's information which comes at the end of the year that needs to be entered on the tax return, it's very important for families to update the marketplace throughout the year if there are changes in income, employment, or household size, so that the premium tax credit amount can be adjusted throughout the year. Families need to know that they can't wait until tax time to make changes in their information with the marketplace. So as many of you may have heard, the 2016 open enrollment period, when individuals and families can sign up for health insurance or change your plan, has just opened and is open through January 31st, 2017. And in addition to this limited period for open enrollment, people are going to be able to enroll for health insurance through the marketplace during special enrollment periods. So this is if they have major life events like marriage, the birth or loss or adoption of a child, and in addition if there is a job change. So if the families you work with have questions about enrollment, healthcare.gov or 800-318-2596 are places where families can get more information about enrolling for health insurance through the marketplaces. So at this point, having given you a very brief overview of the different federal tax credits that families can use to help make ends meet, we want to talk to you a little bit about how your organizations can give families information about these tax credits outreach. So we'll kick off this conversation with another poll question. We'd like to know whether your organization is currently engaged in any tax credit outreach efforts. So if you could please let us know, yes, we are, no, we're not, or if you're unsure, that'll help us get ready for the conversation that follows.
Great. Thanks, Amy. So the poll is now open. Folks should see that up on their screen. And the answers are yes, no, or unsure. Okay, I'm going to give it one more second. It looks like most of the people have voted. So thanks everyone for weighing in. And I'm going to close the poll now. It says 39% yes, 33% no, 28% unsure.
Thanks, Amanda. Well, we hope that the information that we're going to provide next will make it easier for your organization to help spread the word about tax credits to families, and that's really all tax credit outreach is. A lot of you are serving families directly and give them all kinds of information, and so hopefully there's information about tax credits that you can include with that. So the first step is to get information about tax credits, and we have a couple of resources here for you that we'll also present at the end of the webinar in the PowerPoint. The National Women's Law Center will provide updated tax filing information. So we have state-specific flyers that let families know about the different tax credits, federal and state, that they may be able to claim. In addition, we have contact information so that families can find out where they can get their taxes prepared for free. And in addition, the Center on Budget, with more information that Roxy's going to share later, also has information and materials about the federal EITC, the child tax credit and premium tax credit, and other tax preparation resources in different communities. And in addition, the IRS has a special website that also focuses on the EITC, which has numerous information and resources as well, and that's available at eitc.irs.gov. So in addition to having some information about the tax credits, families need to know about where they can find free tax preparation assistance. Taxes can be complicated and daunting, and so there are resources that are available to help families navigate their tax returns. The Volunteer Income Tax Assistance, or VITA program, is sponsored by the IRS and offers free tax preparation help for low and moderate income people. And so generally we're talking families that have under $55,000, $56,000. The AARP also offers tax preparation for low and moderate income families, especially those who are 60 and older, and the IRS also coordinates with AARP as it conducts its tax aid program. And then finally, there are also resources for families so that they can prepare their taxes online for free or low cost. MyFreeTaxes.com offers free state and federal tax preparation services. And then in addition, families may want to consult the Free File Alliance, which is available through the IRS's website, although there may be different charges for state returns. And we'll have information for all three of these tax preparation resources at the end of the PowerPoint. So you may be asking yourself, and the families you work with may want to know, why does it make a difference between volunteer or free tax preparation services versus a paid tax preparation service? So one important difference is that volunteer tax preparers through these programs are trained and certified annually by the IRS and have IRS support. So as volunteers are preparing tax returns, they can reach out to IRS staff to answer any questions that they may have, and that's a great resource. In addition, some paid tax preparation sites, especially smaller ones that may be located in neighborhoods, or you may have seen them at car dealerships or in different locations. Small tax preparation sites like those are not going to be available year-round. They're only open during tax preparation season. In contrast, volunteer tax preparation services through VITA or the other services mentioned here are available all year round. So if something arises later, you have someplace that you can go back and get the information you need. In addition, volunteer tax preparation services volunteers can help prepare or amend returns from prior years and open those up. And extremely important is the fact that the free tax preparation services through the volunteer sites are not going to charge large or unnecessary fees. This can include either charging large fees for giving families kind of an advance on their refund, and we call those refund anticipation loans and refund anticipation checks. With volunteer tax preparation services, families will keep all of the tax refunds that they're entitled to claim. And then finally, and this is something that Roxy is also going to cover in her presentation, free tax preparation services in the community can often connect families with other services or resources that can help them in their financial security. So another step that you can take in tax credit outreach is to provide materials and information to families. Free flyers will be available, as I mentioned, on the National Women's Law Center's website and also at the Center on Budget's Get It Back campaign website. These are available for download for free. We want you to share them widely and make great use of them. And then we're also open to considering whether if organizations want to co-brand them or if there are other materials that be useful for networks, please let us know and we'd be happy to talk about that further with you. There are also very easy ways, in addition to distributing or forwarding flyers, that you can use your website and social media to spread information about tax credits. You can link to information on your website, including the IRS's VITA site locator. There are social media resources available, and a couple of those are linked here from the Center on Budget, some great graphics and Facebook and Twitter shares. So please, again, these are free and available for your use, and we hope that you'll make great use of them this tax credits outreach season. And then finally, something that folks often forget about is that The stories of your clients or folks that you serve, families in your community, who are able to claim and benefit from tax credits can make a difference in advocating to increase or maintain the value of these benefits. So it always helps so that policymakers can hear about the difference that tax credits like the EITC Child Tax Credit and the Child Independent Care Tax Credits, either on the federal or the state level, can make a difference in families' lives. And so we have an example of that from a United Way VITA site that made a difference for a family in Dallas, Texas, where the family's credit refund helped them pay for children's clothes, a crib, and other essential needs. And so we have a link on our site so that organizations can share those stories, but please don't forget to collect those when the families you serve let you know how the credits were used and their refunds were used in a particular tax year. So at this point, hopefully there are a couple of methods in there that your organization can use in letting families know about tax credit information that they can use this tax filing season. And I'm going to turn the presentation over to Roxy Keynes to talk a little bit more about how organizations can work together to spread the word and partner up to expand their reach. Roxy?
Thanks, Amy. So partnerships are at the core of outreach. They are critical for anyone who is seriously committed to reaching workers eligible for the tax credits and who aren't claiming them. You can partner with a range of groups to expand your reach. Think about other advocacy or service organizations in your area. Outreach around the premium tax credit makes partnering with local healthcare navigators and organizations involved in healthcare outreach essential. Businesses are another great partner, and they can really broaden the reach because depending on the type of business, they can spread the word about the tax credits to employees as well as to customers. State and local government agencies are helpful, as are EITC coalitions, which frequently include all of these partners plus others. Outreach coalitions are valuable because they can divide campaign tasks and really use the skill set of different organizations and their ability to reach certain communities. This will help to avoid duplication and make for a much more effective outreach initiative. So what exactly are tax credit coalitions? These are grassroots coalitions that are organized by local community groups serving lower income families. They frequently include the mayor or other public officials as well as local business leaders. In addition to conducting tax credit outreach campaigns, these coalitions exist to organize free tax preparation services, link workers to financial services and asset building programs. This can include access to establishing a banking account or a savings account, connections to financial education classes or financial coaches, and connection to other benefits that are available. Activities of coalitions include developing strategies and themes and materials for the tax season and the outreach campaign. Coalitions are essential for making sure that the messaging is relevant, and for this year, for example, it's important to reflect some of the changes that we heard about. Coalitions also will find new partners to host VITA sites. So there's always a need to expand outreach, and expanding access to free tax preparation is one of the key elements to making sure that workers can claim the tax credits and get their full refund. Recruiting VITA volunteers and organizing trainings for volunteers are also important roles of the campaign, and helping to get information out to workers, whether that is relying on the networks of different partners, reaching out to the media, or looking at other new groups to involve in outreach efforts. Another important partner for coalitions is the IRS. As a partner, IRS staff doesn't run VITA sites. They do help sites get started to ensure quality of preparation. They keep track of groups that express interest in starting a VITA site, but maybe they aren't quite ready to commit to it. They provide the training materials and free tax preparation software as well. And in some cases, in some communities, they may lend equipment, laptops, for programs to prepare taxes. And they are available to provide troubleshooting to help during the filing season. So the IRS is an essential partner in coalitions too. Now that you know all of the benefits of working with a coalition, I'm sure you want to find out if there's a coalition in your community. And to do that, if you aren't certain, you can contact the Get It Back campaign, and we will help you identify if there's a coalition in your community. You can also reach out to your IRS territory manager, and there's a link to find out who your territory manager is. If there is not a coalition in your area, IRS territory managers can help you reach other organizations that have either, again, expressed interest in starting a VITA site or expressed interest in becoming more involved in EITC outreach efforts. And our campaign can also connect you to other organizations that have expressed interest in EITC outreach. To help you cultivate strong partnerships, the Get It Back campaign provides many resources that you can download from our website, eitcoutreach.org. Resources include flyers, posters. There's a tax preparation checklist of items that clients should take to a VITA site. There's lots of graphics and training resources as well. There are other groups that provide many resources too. You've heard a little bit about the National Women Law Center's Tax Credits Outreach campaign, and when you go to their website, you can download a campaign checklist so you know exactly what to do in your outreach from now through April. You can also find state flyers, information about free tax preparation, and several other resources. We also provide an outreach kit, and that outreach kit includes detailed information about the tax credits as well as outreach strategies to help reach those workers that are eligible for the tax credits and aren't claiming them. And the IRS has a site dedicated to the EITC, EITC Central. It includes many materials and resources, including YouTube videos. To find more information about the free tax preparation services that you heard earlier, you can see different websites to get the direct information. The IRS's VITA hotline is a phone number as well as a searchable database. And starting in January, there is a hotline to call to identify AARP tax aid sites. And for the Free File Alliance services and the different companies that participate in the Free File Alliance, you can visit this last web link. And then, of course, you can visit myfreetaxes.com to access that free tax preparation platform. If you have any questions about any of the information that we shared today on this webinar, you can certainly contact us directly and we'd be happy to assist you. And as Amy mentioned earlier, especially if you have any requests for certain materials, or if you have a question and you're not able to find the answer on one of our websites, please do reach out to us.
Thank you so much, Roxy. This is Amy Matsui again, and we do have time for some questions if there are any that folks on the phone are interested in asking now. We do have a couple in the pipeline that I'll ask, but please remember that there is kind of a chat function on the side of on the toolbar where you can submit questions that we can ask to the presenters now. Well, let me start out with this question that we have in, and I think Jillian is well positioned to ask it. Jillian, can a family get all of these the federal tax credits that you talked about if they're eligible?
Yes, a family can claim all of the tax credits if they're eligible. If they're eligible for all three federal tax credits and all three state tax credits and also the premium tax credit, they're perfectly able to claim all of them if they feel like. Well, they should.
Thank you. And I did get a question in earlier which asked about the premium tax credit, so I'm going to do the odd thing of asking myself a question that I will then answer. So the caller asked why you would have to notify the marketplaces of income changes or family status changes with regard to the premium tax credit. And the reason for that is that the amount of the premium tax credit is calculated based on family size and the amount of income. And so if either of those aspects changes in a tax filer's family, then the amount of the credit will change, and it's important to notify the marketplace so that they can adjust the amount of the premium tax credit, which could otherwise be too large or too small, so that the tax filer's family is getting the right amount during the year. So that's why when there are changes in a tax filer's family status or income level, then that's information that should be reported to the marketplace throughout the year. And Roxy, I'm going to ask the next question for you. You mentioned a couple of services like opening bank accounts that EITC coalitions can provide to individuals and families. What are some other services that these coalitions might provide?
Sure. So coalitions often have a focus on asset building or wealth development for families. So other services include credit repair. They also include financial education classes. Increasing number of coalitions are incorporating financial coaching into their work. Many programs offer other services too, so they look at connecting workers to those services as well as making referrals to other organizations that may offer supportive services. Also connecting workers to other public benefits is often a focus of the outreach coalitions.
Great, thank you. And then I have another question about tax preparation, which is whether families whose primary language is not English can get free tax preparation services. Is that a question you can answer also, Roxy?
Sure, absolutely. Many organizations do recognize that they serve communities where English is not the primary language spoken, and so they do offer services in other languages by working with an interpreter. There are some organizations that if an interpreter isn't available, they have a hotline service where they can have someone on the phone that can help make sure that the client understands what information is being requested and that the tax preparer understands what information is being shared. And because limited English proficiency communities is one of the groups that may be more likely not to claim tax credits, because if all of the outreach is taking place in English, they may not know about these tax benefits. There is a need to focus on outreach that takes place in different languages. And one resource that the Get It Back campaign provides is having flyers available about the EITC and CTC and free tax preparation in 25 languages.
Which is a great service. So thanks for that answer, Roxy. So I'm going to report another question which we got in through the chat function, which is to ask about tax credits which are available for ITIN holders. And just a reminder, ITIN is individual tax identification numbers, which can be requested from the IRS for individuals who do not qualify for a Social Security number. So, and I will take a stab at answering this, and Jillian and Roxy should jump in to fill in what I've missed. So first, I wanted to say that tax filers who have ITINs can claim exemptions for dependents, for themselves, both for themselves claiming with, filing their taxes with an ITIN, and then also for dependents who may have ITINs as well. And then a number of the tax credits, the federal tax credits, can be claimed with ITINs. For example, the federal child and dependent care tax credit can be claimed by ITIN holders, and ITINs can be used for to provide information both about care providers and for qualifying children or dependents. And then in addition, ITIN holders can claim premium tax credits, but only for family members who are eligible for health coverage under the Affordable Care Act. And more information is available on the website of the National Immigration Law Center, which is www.nilc.org. And then I am going to ask one more question, and Roxy, maybe you could take a first stab at this one that we got in on the chat function, and that is how can families get a sense about whether they might get more benefit from preparing the taxes themselves versus getting help through a volunteer tax preparation organization or service?
Okay, sure. Before I answer that question, I do just want to add a little bit to the answer to the previous question about what tax benefits can be claimed with an ITIN. So also the child tax credit and the American Opportunity Tax Credit can be claimed with an ITIN. And the American Opportunity Tax Credit is specifically for higher education. When it comes to identifying whether or not someone should prepare their own tax return or go seek help from a VITA site, it often will be based on a couple of factors. One is the person's comfort level. A lot of times people are just so scared and concerned about filing taxes that the thought of doing it on their own may seem overwhelming. Also, using tax preparation software and using a computer, if someone's not so comfortable with that, then they may want to go to a VITA site. And also looking at what is part of the tax return. So for people who have a more basic tax return and maybe have one W-2 form, then preparing taxes on their own would be something that would be most likely be manageable. For someone, if they have W-2s and 1099s from different jobs, or if they have other factors or multiple dependents that they're claiming, there may be some additional questions that a tax preparer could ask to help make sure that the return is being prepared accurately, that if they were doing it on their own, they may miss. So those are some of the factors in considering who would benefit from self-preparation versus going to a VITA site.
Thank you, Roxy. So at this point, we don't have any further questions that have come in through the webinar provision site, through the chat function. And so with that, I want to take the opportunity to once again thank our presenters, Roxy Kane, who is the EITC Campaign Director at the Center on Budget and Policy Priorities, for the Get It Back campaign that does such great work connecting organizations and making sure that families have the information that they need during tax filing season. And also to thank Jillian Edmonds, who's the Income Security Fellow at the National Women's Law Center. We want to thank all of you for participating in the webinar today, and to remind you that the PowerPoint, along with the recording of this presentation, will be circulated by email following the close of this webinar today. We want to thank you so much for taking the time to participate in the webinar, and hope that you've gotten information that you can use to share information with families about tax credits that can make a difference for them this tax filing season. With that, the webinar is concluded, and thank you very much for your time.